Welcome back, your trusted source for real-time updates, detailed analysis, and verified news surrounding the Iraqi dinar and its significance in today's complex and rapidly evolving global economy. For years, Iraqi dinar info has remained a consistent and reliable voice in a space often flooded with speculation, hearsay, and conflicting information. While others chased rumors, we committed ourselves to delivering truth, grounded in facts, reinforced by research, and confirmed through official channels. Our goal has always been to serve as the bridge between uncertainty and understanding, between hopeful expectation and verified reality. The Iraqi dinar has long been a lightning rod for debate, speculation, and scrutiny. Many viewed it as a long shot, a currency too weighed down by political instability and economic challenges to ever truly rise. Others, however, took a different approach. They watched closely as Iraq implemented structural reforms, stabilized its oil exports, improved governance, and engaged with global financial institutions. To these observers, the dinar wasn't a gamble. It was a signal pointing to a much deeper and more promising economic narrative unfolding beneath the surface. Today, all that groundwork has led us to a defining moment. This isn't just another currency update. This is a watershed event. A shift so significant that it challenges everything previously thought about Iraq's economy, its currency, and its future position in the international monetary system. In a move that has stunned markets and silenced years of debate, the Iraqi government has officially declared a new fixed exchange rate, $6.20 USD for every one Iraqi dinar. This is not a theory, not a forecast, and not a rumor passed around online forums. This is a confirmed and executed policy decision, publicly announced by Iraq's Ministry of Finance and the central bank, and verified across national and global financial institutions. The impact of this move cannot be overstated. It immediately forces a global recalibration. Currency traders are adjusting positions. Central banks are reviewing reserves. Corporations are rewriting cost projections. Financial institutions around the world are scrambling to update systems, software, and risk models. What's unfolding isn't just a story about one country's currency, it's a real-time rewriting of the international economic landscape. For more than a decade, the Iraqi dinar has existed in a strange limbo, between belief and doubt, between promise and skepticism. On one end of the spectrum were individuals and institutional investors who maintained faith in Iraq's ability to rebound from years of conflict and underdevelopment. They monitored historical data, tracked government reform efforts, followed the oil markets, and believed in the possibility of redemption through policy and perseverance. On the other end stood the critics and skeptics who labeled the dinar a fantasy, an emotional investment driven more by hope than by fundamentals. They pointed to inflation, political instability, and lack of institutional transparency as insurmountable barriers to any meaningful valuation change. That ideological divide has now collapsed. With the public and official confirmation of Iraq's revaluation and the $6.20 fixed rate, there is no longer room for speculation. The conversation has shifted from if and when to what now. The fog of uncertainty has cleared. What remains is a crystal-clear policy, a new financial reality, and a global market forced to adjust, immediately and without question. This move isn't symbolic. It is strategic. It marks the culmination of years of behind-the-scenes effort. Fiscal reform, foreign policy recalibration, macroeconomic restructuring, and a careful alignment with global monetary institutions. This isn't a floating rate vulnerable to daily fluctuations and external pressure. This is a firm and deliberate declaration of Iraq's economic value, broadcast to the world with unmistakable clarity and authority. Foreign exchange systems across continents are already adapting. Financial software is being rewritten. Trade systems are being realigned. Multinational corporations that operate in or with Iraq are revisiting contracts and recalculating cost structures. Foreign direct investment, once tentative, is poised to surge. The world is no longer looking at Iraq through a lens of caution, but with serious consideration, even admiration, for a nation that has made good on its long-standing promise. This fixed rate isn't a theory or a dream. It's a turning point. And to fully appreciate its weight, we must recognize what has led to this moment. For years, misinformation dominated the discourse. Online platforms were saturated with conspiracy theories, wildly speculative predictions, and unverified claims that often led to confusion and mistrust. That's what makes today so powerful. It's a single act of policy that cuts through a decade of noise with irrefutable fact. The Central Bank of Iraq has updated its official rates. International trading systems are reflecting the change. Global financial reporting services such as Bloomberg, Reuters, and Forex are registering the $6.20 valuation in real time. This is no longer a fringe topic or a speculative footnote. This is a transformation at the highest levels of global financial infrastructure. Investors who were once hesitant are now taking decisive action. Governments are revisiting trade agreements and monetary policy assumptions. And everyday IQD holders, many of whom were once labeled as dreamers or misinformed, now find themselves holding assets of real and measurable value. The long wait is over. The moment is real, and the world has taken notice. Anytime a major national currency experiences a shift this dramatic, the consequences are global. The international financial system is deeply interconnected. A valuation change of this magnitude sends shockwaves across multiple markets, from the US dollar and the euro to regional currencies in the Middle East and beyond. Currency traders are reacting in real time, creating short-term volatility as positions are unwound and rebalanced. Banks are scrambling to adjust foreign currency reserves and issue new guidance to clients. Central banks across the region are monitoring the situation closely, assessing potential impacts on interest rates, trade balances, and inflation. Investment firms are pivoting strategies, reclassifying Iraq from a speculative frontier to a credible and competitive emerging market. Trade forecasts are being rewritten. Bond ratings are being reviewed. Economic outlooks are being updated at record speed. This isn't just a national decision. It's a trigger point for global monetary realignment. Economists are already calling it one of the most pivotal currency shifts since the euro's introduction. Naturally, many IQD holders are now asking what comes next, how to turn the new exchange rate into realized financial gains. While the announcement has been made and is in effect, infrastructure must still catch up. Global financial systems are large and complex. Major banks with active foreign exchange desks are already onboarding the new rate. Smaller or regional institutions may take additional time to align. Before heading to your bank or exchange center, call ahead. Ask if they're processing IQD at the updated rate. Inquire about documentation requirements, which may include identification, proof of currency purchase, and transaction history. These requirements are part of standard global compliance protocols under anti-money laundering, AML, and counterterrorism financing, CTF laws. They're there to ensure secure, legitimate, and transparent financial transactions. Also ask about processing fees, service charges, or incentives. Some banks may offer preferred rates for larger volumes or new account openings. Not every institution will handle the exchange the same way, so due diligence and preparation are essential. Build a checklist. What documents do you need? Which banks are participating? What's your strategy? A full cash out, a partial exchange, or a staggered withdrawal? The way you approach this moment will determine how much of the opportunity you actually capture. This isn't the time for impulsive action. It's the time for thoughtful strategy. The dinar revaluation is not just about instant wealth, it's about what you do with it. And while the global financial community focuses on investor outcomes, we must not lose sight of what this moment means for Iraq itself. This revaluation is not just a financial shift, it is a powerful declaration of national transformation. For years, Iraq has worked through the aftermath of conflict, sanctions, and political instability. Quietly but steadily, the country has pursued structural reform, stabilized critical institutions, improved governance, and prepared for economic resurgence. A stronger currency gives the Iraqi government new tools to import critical goods, upgrade national infrastructure, invest in education, and expand access to health. It also makes Iraq a magnet for foreign capital. Corporations and investors now see a nation not defined by its past challenges, but by its future potential. New industries, joint ventures, and tech-driven opportunities are now viable. Domestic businesses gain access to more capital, better logistics, and new export pathways. Jobs are created. Confidence is restored. National pride is renewed. This isn't just economic policy. It's the ignition point for Iraq's transformation into a modern, sovereign economic force, ready to reintroduce itself to the world, not as a nation in recovery, but as a rising power. As we arrive at this extraordinary financial moment, it's crucial to stay grounded. The $6.20 revaluation didn't happen overnight. It is the result of careful strategy, national reform, and persistent economic planning. It wasn't fueled by hype or emotion. It was built through vision, execution, and resilience. For IQD holders, now is not the time to celebrate and walk away. It's a time to plan wisely. Sudden wealth can be both empowering and dangerous. Many who come into sudden financial windfalls fail to consider taxes, legal obligations, timing, and long-term financial security. Start by speaking with professionals. Consult financial advisors, tax experts, and legal counsel. Understand how your gains will be classified as capital gains, ordinary income, or another category, and prepare accordingly. Every jurisdiction handles foreign currency profits differently. Then ask yourself the bigger question: what do you want to do with this opportunity? Do you want to generate passive income? Build a diversified investment portfolio? Launch ChatGPT said. A business? Fund education? Or leave a lasting legacy for future generations? The steps you take now will shape your financial future for years to come. This moment represents more than just an economic event. It represents a reset, not just for Iraq, but for anyone invested in its journey. The world is watching, but now it's your turn to take control of the narrative. The page has turned. The future is open, and now it's up to you to write your own chapter.